Hey folks, Dan Freer here, the Mortgage Update. Today is June 10th, 2020. So, great news today. The Federal Reserve came out with their new minutes, and I'm going to go over those in detail with you next on what happened with today. With that news, mortgage rates plummeted. They loved the Federal Reserve news. So we're going to go over that. I'm going to show you what the announcements basically said. We're going to go through it and how they changed their verbiage on what they said last month versus this month. And there was a scare because what happens is, and you guys that follow me every day, you know that the markets right now are being, or mortgage rates right now are being determined by what the Federal Reserve is doing, not the GDP, not the payroll numbers, not inflation, nothing. It's all determinant right now of what the Federal Reserve is doing. I'm trying to post every day and let you know the amount of mortgage-backed securities that the Fed is purchasing. And I kind of, when I get some inside news on that, I try to post that. But the news came in today that they're going to continue to buy as much as they're buying now. And the market loved it. So let's go over that. And then what I want to show you is a lot of people, when they buy their first home, they get an FHA loan. And I want to show you how low those rates are. And I have a special for you. So at the end, don't turn this off because I'm giving you a credit. If you mention this video when you apply, I'm giving you a credit. And I'll tell you how much that is at the end and how you do that. So let's get on to what I want to discuss right now. So what I want to go over right now is the Federal Reserve sees that they're going to stay or keep rates at zero. Now, mortgage rates aren't zero, but the federal funds rate is zero. So go back to some of my older videos and just look up Dan Freer, the Mortgage Update, federal funds rate. And I kind of explained to you what exactly the federal funds rate is. It is not mortgage rates. It's not your credit card rate. It's basically interbank lending and borrowing from each other. So that's that in a caption. Okay, so some of the news that came out today, you're going to see this, and the Federal Reserve voted to not really do anything. It's going to continue to buy mortgage-backed securities and other treasuries. And they're saying the GDP, I don't mean to laugh, is going to be minus. So basically, there is going to be no growth in our production for the year, and that's what they're predicting. So let's go on. Here's what the Fed came out with today. And I'm not going to go through the whole thing. Pause it right here and you can read it. I'll try to, if I can, post down below in the comments. I'll try to post a link to how you can get this. But basically, I just want to caption a few things for you. So we broke it down and said, okay, here's their verbiage is the same basically every month. They don't really change that much. So we go through and we kind of scratch out and fix or change the areas in red so you can kind of see what they did change. So basically they said the virus and the measurements taken to protect the health have induced sharp declines. We know that. Financial conditions, however, are improving, basically because of what the Federal Reserve is doing. They're pumping a lot of liquidity into the economy right now. We're going to see those repercussions. I still say it's going to be a couple years down the road. It's going to haunt us at some point. Let's not worry about that today. Let's do what we got to do today. So live your life and enjoy what you got. Let's go through here. To support the flow of credit through the households over the coming months, the Federal Reserve, it says, will continue to purchase. They're actually increasing its holdings. So basically, what this is saying is kind of the same thing. They're going to continue to purchase. This is increasing its holdings. It's kind of the same. So there's really not any differentials in verbiage there. What it's coming in is saying it's going to continue to buy mortgage-backed securities. There's that key word that we follow, and I'm going to get to that in a minute on the next slide. At least at the current pace that it's doing now. They finally figured it out. They've botched this throughout history, but I think they got it finally. So what are we talking about when we talk about mortgage-backed securities? Well, exactly this number right here. What mortgage-backed securities is, basically when we do mortgages, with Dan Frio, you do your mortgage with me. We bundle it up into about $1 billion packages, and these things are sold off as bonds to investors. Okay? This reflects the price of what people are paying for the bond. Let me give you a quick little glimpse on this. Is how I explain it to a lot of the guys in the office, and I'll give this to you real quick. Up is good. Down is bad. Okay? So that being said, up is good. We don't like to see red. So what we're seeing on this chart is green up. We love it. As this price of the bond goes up, it's actually creating a lower yield on that bond, a lower rate, a lower interest rate, a lower mortgage rate. So 42 is a big move. It doesn't look that big here because we have this right here. This is a 42-point move. What in the world were these numbers? And when we lived through this was phenomenal. We went from, rates they were creeping up to 5, all the way down in the low 3s, maybe 2s. And that's where we've kind of just stagnated from there. Came off of that a little bit. Rates are still as good today or better than they were here. Reason being, there was so much volatility in this market that we as lenders had to kind of hedge our bets a little bit and cushion our mortgage rates a little bit. We didn't know what the next day was going to do. Was it the rates going to spike or plummet? So we padded rates just to make sure we didn't get caught losing money. So what happened today? Well, in the stock market, it tumbled a little bit because a lot of people moved into the bond market thinking the GDP came out, gross domestic products. It's going to be bad, which you see right here. And a lot of people move their money from stocks. I always tell you this, they move from stocks into bonds. Those bonds that they're pushing their money into, in a lot of cases, is mortgage-backed securities. Okay? So that's what's happening. You're going to go down through here and see refinancing. People that are refinancing, it was up 11% year over year. There's a lot of people realizing at this point, you know what, I might want to look at really doing something. I still have people calling me that have rates in the mid to high 4s, if not in the 5s. They're like, well, what can you do for me? I'm like, well, I can get you 3.25 and save you $500 a month. But again, as I always say, don't be wowed over the rate. Let's also break down the fees. So if you're out there and you're working with somebody right now and you're happy with what they have or they've offered you, please send me the numbers. Send me what they call your loan estimate. If you're in the process of doing a loan with somebody, they sent you a loan estimate. What it does is it breaks down and says, here's your mortgage amount, here's your rate, and here are all the fees that you're going to pay. Most salespeople, not mortgage advisors, I'll say salespeople, are going to completely pitch you on rate and want to completely bypass the costs. We want to compare the whole ball of wax. So I'm asking you, if you're in the mortgage process right now, and I'll give you how to contact me. If you're in the mortgage process right now, send me a copy of your loan estimate. In most cases, I'm beating people on the rate, the fees, and or both. And in a lot of cases, I'm winning in both categories. So now let's go to the next section, the headline news today. And I post this every day on all my social media. Mortgage rates surged lower. When I first started reading this, I said, mortgage rates surged. They're crazy. And then lower. So then I read that and revised that a little bit. So mortgage rates have plummeted. If you've already are with me, I'm monitoring this for you. Trust me, you're in good hands. Again, if you're with somebody else, I'd love for you to reach out to me. So that's basically the recap right there of what happened in the market. What I do want to go over next is, where are rates today? And here's this special caption. Somebody's looking to buy a house for $285,000. We did this one in Texas. I'm getting a lot of applications in Texas right now. So somebody's looking to buy a house in Texas, $285,000. They put down 3.5%. That's all you need for an FHA loan. And that creates this loan amount. So we plug in these numbers. This calculation right here, I'm going to show you live what my mortgage rates are. And then I'm also going to show you a special for just you guys watching this. And when you call in or apply online, please mention this special. Okay? It's going to be June 10th, $750 off. Okay, just say, hey, I watched Dan's video, and he said I get a $750 lender credit. I'm going to show you why. So right now you're purchasing this house, 740 credit, you're in Texas, we're going to go in FHA loan. We're going to go down through. Let's see what the rates are right now. And it is June 10th. And we're going to click into here because it's a Ginnie Mae FHA loan. And here are the rates. So rates are right here. Let me explain how these numbers work, okay? Let's say right here, any number that's a negative, that means you're going to get a rebate check back to use it for any costs or anything you want to use it for. Any positive numbers is meaning you have to pay that fee to get that rate. So what I'm giving you right now is up to a $750 credit as a lender credit back to you. Why? You can get a rate at 2.875% on a 30-year FHA loan. It will not cost you any points or any discounts. So that's my special of the day. So if you'd like to reach out to me, I'd love to help you. Give me a call at 844-775-LOAN, and loan's actually broken down as 5626. You can also reach me by email. Probably the best way to reach me by email. Let me see. I just launched this video yesterday. Let's see if if the contact thing is working. I hate to say that. I'll reach out to you. Oh, here it is. dfrio@preferredrate.com. You can reach me there, or give me a call at 844-775-5626, and I'd love to help. I am in Chicago. This is one of our corporate offices, but I'm in Chicago. I'm on Central Standard Time. So if it's during office hours, I will get back with you. If you apply now, right here, and want my help, if it's during office hours, you will be contacted within the hour. If you just want some questions or just to reach out to us, just go here and hit a rate quote, and you're going to fill in your information. And again, if this is during office hours, Central Standard Time from 8 to 6 p.m., we will be with you within the hour, I promise you. If you don't hear back on us, please, I hate to throw this burden on you, give me a call and just reach out to me personally. I promise you, we're getting a ton of these in. If you get bypassed, I apologize. I have 3 people monitoring this to make sure we don't miss anything, but I'd love to help you if I can. If you have a mortgage right now and you haven't looked to do anything yet, what I'm going to ask you to do is, if your rate is, let's say, in the high 3s or more, please reach out. And I'll go through all the programs, all the numbers. Let's see if it makes sense to you. Sometimes it does, sometimes it doesn't. So I hope you like the video. If you do, please give me a thumbs up. Please subscribe down below. I always miss this. And I'd love to hear from you. So please leave some comments. Share the video. Let's try to help as many people as we can. I'm trying to get to 10,000 subscribers by the end of the month. And then, I can't do it without you guys. So God bless. Take care. I'll see you tomorrow. Same time, same place. Bye-bye.